Welcome back, everyone. You're watching the Money Control live stream. Well, it's been a strong comeback for us, our markets, after a trading holiday yesterday, and largely on the back of very positive cues that are emerging globally. If you look at the Nifty and Sensex, they're at this point of time looking all set to end the day in the green territory. But it's the small cap and mid cap stocks that are on fire, largely on the optimism for the Indian economy at this point of time. If you look at some of the sectoral gainers, metals, IT stocks, banking stocks are among the top gainers at this point of time on the Nifty 50. And clearly, Santo, it seems that a little bit of tentative risk appetite is recovering in the market.
Well, I would say that at this point, the bulls just want to see everything that is sounding right and looking right. And there's far more optimism going into this earnings season than there was the previous time. But just there's a slight difference here, CJ. We can't really ignore the fact that stocks have become even more costly than they were last time. So that is one of the risks which I think at this point in time, the over-enthusiastic bulls are overlooking.
Santo, last time when we were starting off the earnings season, we were near 52-week low. This time around, when we were starting the earnings season, we are near to the record highs. We're only like 1,200 points off the record high.
But that said, CJ, when you buy stocks at higher levels, far more than what they are worth, well, that's again a subjective matter. But if you buy them expensive, then there's every chance that the returns that you make over the next few years will be subpar. So that is the big risk going into it. It's not, I don't think at this point, the big risk is that prices may collapse all of a sudden. The bigger risk is probably that your returns will be quite mediocre.
Yeah, I mean, what is the risk that you're taking for the reward that you're getting? I think that is the biggest question that investors need to ask themselves. That said, a lot of stocks were buzzing in trade today because
Before I close, CJ, just one thing, and I'm still hopeful that the Q2 season still, besides some bit of surprises, you could see some bit of disappointments as well. So that said, there would be some opportunities for
Santo,
sure.
last time around you said this, we did not see as much downgrade as you were expecting to earnings expectation. But let's see if this time around, your pessimism pays dividend.
A broken clock is right at least twice a day. I thought you would throw that in my face.
Well, that's it. Let's move on to the stocks in trade today. Some of the stocks that were buzzing in trade today, and the first one is from the asset management.
Yes, HDFC AMC. I know this is a very unloved stock and it's a bit of a defensive stance at this point in time. But I think, CJ, now the stock appears to have bottomed out somewhere around 1800. It's bounced back from that level quite a few times. And there is reason to believe that probably from here on things can only get better for HDFC AMC. You've seen the stock occasionally participating in the market rallies, though it's not been sustaining at higher levels. Now, according to Kotak, now this is a report which it had put out last month, while taking a bullish view on HDFC AMC, it had said that the performance of HDFC AMC's equity schemes, they're showing some bit of improvement with 70% of their equity assets now in the first or second quarter.
Well, thanks to the PSU rally that we have been seeing for the past 18 months.
Well, see, the reason, one of the big reasons for the stock underperforming is also because of the poor performance of its equity schemes. Now that is changing a bit. But more importantly, another point which it had made, I think could come into play right now, which is that a big chunk of HDFC AMC's equity assets are in the defensive place. That is, HDFC AMC has more of balanced funds and flexi-cap funds, which means that whenever the market is turbulent, these stocks, these kind of schemes tend to fall less. So that is a added advantage in a turbulent market, not so much in a rising market. So that is the other thing. And thirdly, the merger with HDFC Bank is most likely a positive for HDFC AMC, because among all mutual funds, the sales through banking channels has been the lowest for HDFC AMC. So these are some of the factors that are in favor of HDFC AMC at this point in time. And remember, the stock has not gone anywhere at all. So I don't think there is much to lose.
Yes, Santo, clearly, I mean, maybe there is not much to lose, but I don't know if there is much to gain as well. If you look at, the chatter around HDFC AMC the past 1.5, quarters has been the fact that finally it seems that the market share loss in the equity AUM segment seems to have hit its straw, and now the recovery has been happening. But if you look at the data from April onwards, the recovery has been very piecemeal in my point of view, compared to the almost 400 to 500 basis points of market share lost over the past three years in the equity AUM. The company has so far only regained almost only 50 to 60 basis points, if not less than that. So for me, I think this is still an evolving story. We will still have to wait and see. There are this revival picks up momentum going ahead before one can take a very bullish call on this stock. Apart from that, I am a little concerned about margins, and I think margins probably will be something that will remain in focus going ahead, because HDFC is trying to catch up to some of the contemporaries in terms of the amount of ETF products it has on its portfolio. And because ETF products tend to be low margin, accretive businesses, I think going ahead, the margin itself could probably come into question, and we will have to wait and see how that evolves and what sort of strategy the management has to mitigate that going ahead. So for me, yes, maybe you can keep it on your watch list for the time being if there is a spurt, but maybe the upside also looks quite capped to me. Well, the first stock on my radar today is Bajaj Finance. Well, the stock was actually weak today because of, of course, when you used to delivering, spectacular results every time, Santo. Every chink in the armor becomes, magnified.
This is like nothing less than 100 is good enough for Sachin Tendulkar.
Yeah, exactly. I mean, if you get out on 90, 95 or a 90 or a 50, it seems like you have not batted at all. So I think Bajaj Finance is basically, at fault for its own standards. And if you look at the, the Q2 business update that came through, it was spectacular throughout, but the only disappointment was that the loan disbursements were actually down sequentially almost 6 to 8%, and market picked up on that, and that is why we have seen the weak performance for the stock today. But from my point of view, this company still remains the preferred NBFC bet in the market, largely because of its growth potential and also because it is a deposit-taking NBFCs, unlike many of the non-deposit-taking NBFCs. At this point of time, we know that in the Indian financial sector, it is a tussle to get funds so that you can lend it onwards to borrowers. Apart from that, if you look at the other metrics, AUM grew almost 7% on a sequential basis alone, more than 30% growth on a year-on-year basis. If you look at deposits, they were a big surprise. Deposits jumped 15% on a sequential basis for Bajaj Finance. And I think going ahead, the stock's premium valuation, Santo, is largely going to continue because of the fact that the company has again come back into the 30% year-on-year loan growth trajectory, which used to be, what Bajaj Finance used to deliver on a quarter-on-quarter basis every quarter before the pandemic. So for me, the picture looks quite bright, and any sort of correction probably could be an opportunity.
Well, in some way you have taken away my defense, CJ, and you answered it yourself. See, the thing that the market is most concerned about right now is the rate of loan growth. And as you said, Bajaj Finance has been a company that has been giving spectacular growth rate for quarter after quarter, which also were unsustainable. But now the point here is that the stock is now given a certain valuation by the market at this point. And having given that valuation, it's only natural that the market now expects that kind of growth rate to either sustain or they reduce the valuation. Now, Bajaj Finance shares had peaked out sometime in October, November last year. It had crossed 8,000 and then it fell all the way to around 5,300. Yeah. It's bounced back from there, but then again, if you see, the stock price has not gone anywhere. That's because the rate of growth has slowed, and now even though the market has recovered, I think investors are being a little choosy here, and while they are not overtly negative, you don't find too many negative calls on that. There are very few broking firms also which are negative on Bajaj Finance at this point in time. But unless you see those kind of growth rate or growth rates anywhere close to that, or they get a feeling that the Bajaj Finance still continues to outperform its peers by a huge margin, I don't think you're going to see the go-go days of 2021 that took the stock past 8,000. Besides that, CLS has pointed out that a higher share of the loan book coming through mortgages is also not a very good sign, because the return on equity out there is quite low. So there are reasons for why the market is concerned, and you saw the stock underperforming despite the strong second quarter update that the company came out with today.
Well, Santo, I take your point, but I think going ahead for the market, probably how the company delivers on its digital transformation, I think will remain quite key in terms of valuation, because let's not forget the sort of valuation that Bajaj Finance was getting at its peak were largely comparable to some of the fintech giants we have seen in the world. So I think to get back to those sort of valuation, I think Bajaj Finance now, or investors at least, expect the company to deliver on that digital transformation that the company has been over the past 8 to 9 months. And if they can deliver on that, then I think sky is the limit.
Well, CJ, we can argue on this endlessly, but here again is the risk that I've been pointing out, that these companies are good, but also you need to be mindful of the kind of returns that probably one can make if you were to buy them at elevated valuations. That's my only concern here. Slightly old school in my thinking here, CJ, but forgive me for that.
Well, Santo, moving on, which is
the Ujjivan Small Finance Bank, again, a solid second quarter update. Now, the stock was down in the dumps till in July, and since then the stock price has almost doubled. And if you look at the numbers, the update that the company has given, deposit growth 10% quarter on quarter, 47% year on year. Disbursements are up 56% year on year, 12.5% quarter on quarter. Retail deposits have also grown significantly, almost 75% year on year, more than 15% quarter on quarter. CASA funds has now 6.6% growth quarter on quarter and almost 73.5% year on year. So, a strong set of numbers, and according to Axis Capital, the report which it had come out with last month, this is a good example of strong demand across all segments, be it the MFI segment, be it the financial institution groups, or for that matter affordable housing and SME, MSMEs as well. All of these segments are seeing good demand, and hence that makes the stock stand out among its peers.
Well, clearly, Santo, I think Ujjivan has been on a recovery path, so to say. I mean, last year there were a lot of concerns because of COVID as to how the MFI portfolio will, perform. And if you look at the collection numbers from the restructured or the NPL side, clearly collection numbers have been improving, but that still does not take away the danger. We know that India is going through a K-shaped recovery, and while loan demand may be strong, what is the purpose of that loan? That still remains to be seen. Is it to add to your household, to your business that you're doing, or is it just to make do and survive the business that you are into? So for me, I think concerns over the health of the MFI portfolio will still remain. Yes, collection efficiency there has improved. A lot of people have been coming back post the pandemic, paying out their loans that they were, they had asked to restructure during the second wave. But I think that concern will still hang over the company until unless we clearly see a dramatic improvement in non-performing loans going ahead. Apart from that, if you look at it from a short-term technical perspective also, Santo, the chart of the company at this point of time is not really indicating any sort of bullish momentum. It seems to be somewhere stuck in a neutral zone, and therefore for me, if you do get into a stock like this at this point of time, I think the upside is likely to be capped, because a lot of people out there are waiting to book profits or maybe cut out their losses that they may have suffered over the last year.
I dispute that one, CJ. The stock has almost doubled.
I know, and that is why I'm saying the past, if you look at the recent past few sessions, momentum, the RSI is somewhere around the 48 range, which basically is not really buy territory, neither is it sell territory. So clearly the momentum is quite neutral, and maybe the stock, after doubling over the past year, maybe is heading into a consolidation zone at this point of time. Well, the next stock on my radar is from the real estate space, Santo, and this is Lodha Developers, or as the listed entity is known as Macrotech Developers. Now, the stock was muted today in trade, even though it has come out with some spectacular numbers as far as the business update is concerned for the second quarter. Best ever pre-sales the company has made, over 3,000 crores in pre-sales, over 57% year-on-year growth. Now, let's not forget that the year ago quarter was not really that bad in terms of business for real estate companies, because that was the the initial boom time as far as residential property was concerned. So to do a 57% jump on a base like that clearly is a very, very spectacular performance. Demand traction clearly is there. I mean, you can see it in the pre-sales number, and this is despite the fact that interest rates, if you look at it from a year-on-year basis, they are higher by almost 190 basis points just on the repo. So you can extrapolate that onto your housing loans, and clearly you have more than 150 basis points of increase in home loan rates, and despite that, the demand has been quite strong for the company. And for me, I think, Santo, if we were to take a 3-year view, maybe 4-year view, Lodha clearly will emerge as among the biggest beneficiaries of the bull cycle that we have seen in the residential property space in India over the past 1 year, which a lot of people believe could last at least 6 to 7 years.
Well, CJ, this is a stock which I find a bit surprising as far if you just were to look at the fundamentals. There is a lot of things which are going right. Quarter after quarter, the company has been doing quite well. June quarter, you saw a brief dip in its top line, but on the whole, if I were to look at from the last 4 or 5 quarters, there's been a significant improvement. Most importantly, the company has also managed to bring down its debt considerably, which I think is a fairly big achievement for any real estate company, because debt often seems to be the biggest problem for them. With that said, somehow again the market does not seem to be appreciating it, CJ, and I don't have an answer to it. Maybe you can enlighten me on that.
The major concern for real estate companies in general, and if you look at the if you look at the charts, I think the major sell-off came from May onwards, and that happened because of the rising interest rate in the economy, and generally the belief goes that if interest rates are rising, therefore, probably people will not be so savvy to buy new homes or purchase new homes. Also, I remember one of the points that you had made earlier in the show not so long ago about the IT, job market. Whenever IT job market tends to stagnate or see a slowdown, residential property sales tend to also suffer along with that. So maybe somewhere there is a little bit of caution in the market, but that caution is still not translating into actual numbers on the ground, and therefore there seems to be a break between the reality on the ground and where the market expectation is.
Yeah, the stock peaked out sometime in December. In fact,
Yes,
it hit a
yes.
high
I
of
think that was the
1500.
time when real estate stocks were really on fire, after the second wave.
It's still 33% down from its record highs.
I was checking today, Santo, Godrej Properties actually, if you look at it, a 1-year performance of BSE 500 stocks, Godrej Properties is down 50%. A stock like Godrej Property, which is supposed to be the creme de la creme, the HDFCs of the real estate space,
Right.
even a stock like that is actually down 50% for the past 1 year. So clearly goes to show the price damage that we have seen in real estate companies, even though performance on the ground seems to have been faring quite well.
The last stock on our watch list this afternoon is Cholamandalam Finance. Now, again, this has been one of the stocks which has managed to withstand the recent upheaval in the market, and quite well. It had taken a sharp knock sometime in June, but since then it has in fact made up for most of its gain. Now, for good first quarter number, now we are almost into the second quarter, but in the first quarter number itself, you could see that the company's strategy to kind of spread its bets, it's predominantly it was into the auto financing segment. From there it is now it's got into mortgage as well and SMEs. So those bets seem to be playing out pretty well, and probably we could see that trend strengthen in the coming days as well. And besides the pedigree, CJ, that's also one of the reasons why the market is willing to assign a higher valuation.
Yeah, and Santo, I think Cholamandalam always has had a reputation of being conservative and still, delivering growth. And earlier the questions were that was the conservatism merited, given that there were so many opportunities out there. But now the company is clearly delivering on both fronts, because the conservatism is still there, the high, underwriting standards are still there, but at the same time the company is able to ride the tidal wave almost that we are seeing in terms of credit offtake in the economy at this point of time. And I think overall the stock looks like a decent bet, because generally when there is so much euphoria or exuberance around credit offtake, the discerning investor is always looking for the companies or lenders who have very, very strong credit underwriting standards, and Cholamandalam is clearly one among the best out there.
Well, with that a quick look at the markets, the Nifty has given up some of its gains early in the day. The Sensex too is now off with the day size, up about 150 points, and the Nifty is now up just about 55 points. It was up more than 120 points at once.
Yeah, exactly. I think, Santo, we have seen a little bit of profit booking in the market, but if you look at some of the sectoral indices, clearly Nifty Bank is the one that has really come up substantially from the day's high, higher by only 0.4% at this point of time. It was almost up 1% at one point of time. Nifty IT, Nifty Metal is still holding quite strong. So the export themes are doing decently. Nifty IT higher by about 1.6%. Nifty Metal Index higher by almost 3.5% at this point of time. So a lot of short covering happening in that space. Now, Santo, one of our viewers, Abhishek Ranjan, has a view with respect to L&T. Now, the question is basically, is L&T a defense bet, or a bet on the defense sector? I mean, we have seen a lot of companies get into this space, but L&T is one of the oldest out there. And I remember, if I'm not wrong, I think that during the June quarter earnings call, the management also sounded out quite bullish about the prospects of the defense space.
I think it will all depend on where it fits in the overall picture. If defense is fast growing but still a small portion of the pie, which it seems to be at this point in time, it won't, to use a management jargon, really move the needle for the company, and that is why it's still seen as primarily a capital goods player at this point in time. So maybe defense is doing well for the company at this point in time, but till the size grows to something meaningful, I don't think that in itself can be the trigger for the
Santo, if I were, Abhishek, I would probably not even bother thinking about the defense space, given that the infrastructure space, which is the core business for the company, I think that in itself is doing so well that you don't really need to think about any other alternatives. The hydrocarbon, the infrastructure, the power space, all of those space are seeing very good order book traction at this point of time. So clearly, I think L&T, if you look at it, the past 1 year has been one of the steadier performers in the market, and with the buzz around capital goods stocks and the optimism around that, I think L&T will remain the top of the pack for a lot of people who are hunting in that space.
Well, and what do we keep an eye out for, CJ?
Well, Santo, today in the evening, the US initial jobless claims data will come out. So that is a key data point to keep an eye out on. Apart from that, tomorrow, of course, we will have the non-farm payrolls data or the jobs data for the month of September, a very, very crucial data point as far as the US, the trajectory of the Fed rate hikes are concerned. So key data, economic data points are coming out. But apart from that, of course, keep an eye out on the oil market, what is happening there, whether we see a surge in oil prices later in the day when New York opens for trading after that 2 billion barrels per day cut that has been
2
announced
million.
by. Yeah, 2 million, sorry.
2 billion would
2
really
billion would
sound-
probably, you would have oil prices at $200 per barrel then. But yeah, 2 million barrels per day cut announced by OPEC. So clearly it will have far-reaching implications in the oil market, but also for inflation for economies like ours. So those will be the things to watch out for.
And the job market is something that the stock market now seems to be pinning a
Yes,
lot
yes,
of hopes on.
laser
And
focus.
slighter signs of cooling, and immediately the bulls are saying that okay, now now the given the slackness of sort in the labor market,
Yeah.
maybe the Fed won't hike as aggressively.
Well, that's the Santo. Let's wrap it up.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.